Is this a Bitcoin bear market rally over, or is it still in full swing? As I get into this video, if you find it useful and informative, hit that like button. I do appreciate that. If you're new, subscribe. If you haven't yet joined us in Discord, check it out. Linked in the description down below. I don't think you'll be disappointed by what you find down there. So let's make a start with this one. We're going to keep it as brief as I can. And we're going to be going through a lot of the on-chain data. We're going to be taking a look at the macro views for Bitcoin, taking a look and giving my thoughts and opinions on where I think the next big macro move is likely to take us. So let's start things off by taking a look at the on-chain data. So right in here, we have three boxes, top right-hand side. These are inflows of Bitcoin to the exchanges, outflows of Bitcoin from exchanges, and the difference between those two numbers. This is all from the 1st of January 2023, and we've seen 1.7275 million going onto the exchanges and 1.7212 million coming off the exchanges. This means that there has been 6.29 thousand Bitcoin more going onto the exchanges than has come off. Just to kind of reiterate, the definition of a bear market is when the supply outpaces that of the demand, and a bull market is when the demand outpaces that of the supply. So when we take a look at inflows and outflows, whereas it's not a perfect analogy to supply and demand, it helps us kind of articulate what is going on just a little bit. It makes it a little bit clearer for us. So when we start thinking about inflows as our supply line and outflows as our demand line, we can see that actually we're in a more bearish state than we are in a bullish one. Personally, I say it's more neutral because it's not a massive number, 6,000 Bitcoin, but it is more bearish than it is bullish, right? More Bitcoin has gone onto the exchanges than has come off. More Bitcoin has become available to be sold than has been taken off for cold storage purposes. So when we think about this, yes, it's not perfect because sometimes people buy Bitcoin and hold it on the exchanges and they don't ever put it into their own self-custody wallet, which in my opinion is absolutely foolish. And if you are one person doing that, you should probably do some research on hardware wallets. Ledger.com is linked in the description below. That's who we use. Do obviously make sure if you are looking at one of these things, buy it directly from the manufacturer and not from a third-party site. Unfortunately, there can be some fake devices out there, so always get it from direct from the manufacturer. Link to the description below is a direct link to Ledger, and you should be safe that way. But anyway, moving on. So yeah, when we see this market like this, it doesn't support bullish, it supports at best neutral. Okay, we can see down here we have the balance of Bitcoin on exchanges. It's incredibly flat. We talk about this all the time, so apologies for new viewers. I don't want to kind of go through everything and repeat myself consistently over and over and over again, so do go back and watch some of the previous videos if you're looking for more information about these things. But you can kind of see that essentially all we've been doing here is just going flat sideways since December, and this basically means there's equal buying and equal selling occurring. And this is also visible up here when it comes to our 30-day average bars. Each one of these bars here on this graph is a 30-day average, a difference between the inflows and the outflows, and we can see that it's more positive after being slightly negative. It's basically just incredibly flat, and this basically tells us that we have equal buyers with equal sellers, and the market is not bullish. Okay, and this is one of the things that you need to understand is the very definition of a bull market is when the demand is basically soaking up as much of that supply at the point that there is insufficient supply for the demand. And at the moment we have it's neutral. There's basically plenty of supply out there, and that's the problem. That basically suppresses price. Okay, and price movement and price appreciation or price decreasing essentially only ever comes down to two simple things: supply and demand, like everything in real life. So just bear that in mind. Now, I'm not going to talk about the hodl waves, but essentially that's just tracking how long people have been kind of hodling Bitcoin for, how long have it been static for in a wallet. For the most part, ages. I'm not going to go into that today. Inflows and outflows are interesting. As I said, right, we had that kind of neutral situation, 1.7275 going on and 1.7212 coming off, right? This is current for 2023, 1st of January through to yesterday, essentially. Now, if I take a look at this from 2018 going into 2019, okay, so the 1st of January 2019 through to the same time period, how much Bitcoin was going onto the exchanges versus how much Bitcoin was coming off the exchanges. Bearing in mind here, we are 1.7 going in and going on and coming off. When we take a look at 2019, it was 2.9 2.98 and 2.97. Okay, so yes, the market was still neutral at the very beginning of a bull market, but the volumes were nearly double what they are right now. Okay, so it's important that we kind of acknowledge that for Bitcoin, we have very, very insignificant volume pushing through in comparison to where we were at the 1st of January 2019 at the end of the previous bear market. So in the end of the previous bear market, there was sufficient demand coming in, almost double that of what we're seeing now with buying and selling activity occurring. Whereas right now, we're a fraction of what was actually occurring back then when the start of the previous bull market actually occurred. Although it started in a very similar way with equal buyers and equal sellers, the volume was much, much more significant, and therefore the supply was able to shrink much quicker than we are potentially able to see right now. So the concerns here are that although the market seems neutral from an inflow-outflow point of view, the volumes are very, very much suppressed in comparison to where they were previously. Now, as we move on to wallet counts, we like to track, the different retail investors and the different institutional grade investors. This is important because you got to follow the money. If you follow the money, then you're going to be able to understand how this market works. Okay, so in an unregulated market that this is, in fact, it also happens in regulated markets regardless, you have large institutional funds. They call this smart money. It's not really smart in the sense of intelligence, but essentially what it's doing is it's large amounts of money that can move the price. Okay, and that's not really what smart money wants to do. That's not what these institutions want to really do. They don't want to move the price unless, of course, you're trying to manipulate the market, which does happen. It's a part of smart money concepts. Manipulation is a part of it. But when it comes to what the goals of the institutional investors are, it's all about liquidity. It's about making sure that they can buy and that they can sell without moving the price, because they don't want to move the price massively. What they want to do is they want to accumulate with buyers and sellers, and they basically also want to be able to liquidate with buyers and sellers. And essentially, in order to do that, they need to have pockets of liquidity. And liquidity is absolutely key when it comes to supply and demand. So if you were to look at demand and supply trading with something like liquidity, I mean, smart money concepts kind of covers it all anyway. But essentially, it's very, very powerful stuff because it helps you understand the market structure and how the market is more than probably going to move in order to kind of fill those gaps of liquidity. Now, why do I talk about this in line with our wallet counts? Well, the wallet counts give us an indication as to the number of participants that have a certain number of Bitcoin and whether or not that is going to help move the needle in any one direction. Now, here we have Bitcoin dust, which essentially is Bitcoin holders that have at least 0.01 Bitcoin in their wallet. And we can see that we had a bit of a nosedive of around 100,000 wallets. This started in February, mid-February, down towards the end of February. We went back up again and we're starting to go down. This is basically a typical retail investor overreacting to price movement, an emotional retail investor. And these are, unfortunately, the most vulnerable retail investors. They've invested a few $100s or whatever in BTC, and they've kind of, maybe lost some money, maybe they gained some. They're emotional to it. They're not going to hold long term, essentially. Now, as we kind of move up into the larger sized retail wallets, they're still retail, they still overreact to price movement, they're emotional. These kind of investors, these retail investors, they are the ones that are a little bit easier to kind of trick into thinking that something is going to happen, and they get caught out, essentially. So here we have 3 wallet sizes. We have Krill, which is over 0.1 Bitcoin. We have Shrimp over 1 Bitcoin. And we have dolphins over 10 Bitcoin, right? So they're all different sizes, different demographics, and it kind of scales up. Now, I've bucketed these together because essentially they all react to price movement in a very similar way. They overreact, essentially. So we can see that they have all been accumulating recently, right? We can see that the black line, which is the number of people who have at least 0.1 Bitcoin, has been going up as prices come down. This is pretty typical when you have moon boys telling everybody that you're in a bull market. Essentially, what you tend to find is that these retail wallets react with that news and they buy up, right? You saw this in June, you see it in November, you see it time and time and time again, essentially always believing that the bottom is in and just emotionally buying and buying and buying. And eventually that buying pressure eases when they realize that they've been duped, essentially. And unfortunately, the big issue here is that they will actually end up selling, and they'll end up selling at just the wrong moment in time. And it tends to happen every single cycle. Now, you can see that all of these have reacted the same way. But when we go up into the smart money, the institutional grade pools of pockets of liquidity and money, we see the opposite effect, right? We see that there's always going to be buyers and there's always got to be sellers. We spoke about this with a neutral market, right? You see that the retail investors have been buying, which means that someone was selling to them. And essentially, we go to the institutional grade wallets and, well, bam, there you go. We know that the big money, the smart money, has been selling and liquidating their Bitcoin, and it's being sold directly to the retail investors. So retail investors have been providing the exit liquidity for the institutional investor. Now, you can ask yourself this. Which one do you think is right? Do you think that the institutional grade investors with all that big fund behind them are the ones that are wrong and selling the bottom? Or do you think that maybe the retail investor with their over-emotional states are the ones that are actually in the wrong here and have been providing the exit liquidity for the institutional grade investor? Maybe you believe that the retail investor has it right and the retail investor is going to win this one. It's entirely up to you how you want to feel about it. I personally think that I'm going to side with the billionaires who pretty much control the direction of the market. And since they've been coming out and have been coming out since I think it was March 2022, yeah, I'm going to go with that one myself. Here we can see that the Bitcoin sharks, 100 Bitcoin or more, they accumulated Bitcoin before the pump to the upside, not during, not like a retail investor. They saw something coming. They accumulated it, and then they've been coming out, okay, after it's pumped. They made some significant cash here, sending it back to the retail investors. Now, over on the whale side of things, well, they don't give a damn. They're just continuing to sell. They're down to 2,002 wallets. Soon, I think this is going to drop down lower than the 2,000 wallets. This, by the way, guys, is a bear market low for the number of whale wallets. Okay, I've been talking about this for a very long time. It should be no surprise to anyone that this is carrying. This is a 365-day view of these wallets. These are big institutional wallets. We all hear about Bitcoin whales all the time. Yes, Bitcoin whales are the ones who are controlling the market. And right now, it does appear that these Bitcoin whales have been using retail investors' emotions against them and have been offloading their Bitcoin consistently. Now, we talk about this in June over here. In fact, we talk about this all the time. But in June, we were saying it's not the bottom. Not only did we not have a correct, we did not have a good impulsive structure or trend reversal structure appearing from the chart data, but we also had our Bitcoin whales selling into that pump that was going to the upside. Then, of course, we have the November low, right? That's the one that a lot of people are believing a bottom is in. And what do we see? Well, we still see this black line, number of whale wallets decreasing. Okay, it's no surprise that we're in a new bear market low for these wallets, and they're continuing to sell. They're continuing to sell because, quite simply, they haven't created the bottom yet. The bottom isn't in. The bottom will not be in until retail investors sell their Bitcoin to the whale investor, in my humble opinion. Now, obviously, we have a Kraken size wallet. The Kraken size wallet is basically a wallet here that's been fluctuating around a little bit, has kind of sold off a little bit here, nothing terribly too much. There are 117 wallets at the moment. Now, in 2018, this is what the Kraken size wallet did. The Kraken size wallet basically accumulated during the bear market. It was massive amounts of accumulation, all for one purpose: flood the market with excess Bitcoin. As I said earlier, everything comes down to supply and demand. And these guys basically create an imbalance in that supply and demand, okay? And that basically pulled us into the bear market bottom right down here. Now, where are we with the Kraken at the moment? We're exactly here. They've been accumulating during this bear market. They are yet to flood the market with excess Bitcoin. Are we getting there? Possibly. Do I know when it's going to happen? No, and no one does. But essentially, what's going to happen, in my opinion, is that these guys will flood the market with excess Bitcoin, create the imbalance in the supply and demand, and we'll see price completely tank down incredibly hard, and the bear market low will come in. Now, it takes only a moment for that to happen. It's going to be quick when it does. You won't spend much time down in those lows. But essentially, what we're looking for is we're looking for that to happen so that we can be confident that the bull market is come in. Okay, we're looking for basically three things. We want to see our retail investors sell. We want to see the whales buy from the retail investor, and then we want to see the Kraken wallet basically flood the system with excess Bitcoin. Once that happens, I'll be very confident that whatever reversal happens is going to be basically a confirmation of the next bullish cycle. But until those three things happen, by following the money, I don't think we're going to be in a bullish state anytime soon. We have really insignificant inflows and outflows, and we just do not have the data on chain to support a bull market, in my opinion. But what about the charts, right? It would be great for me to be able to draw a trend line, wouldn't it? And I could probably do that. I could be like, look, we're in we have a trend line drawn on here, right? We'll just go ahead and draw it on. I've really, let me try that again. Trend line. If I draw a trend line on here, right, and we can draw it on, and we're like, fantastic, we broke the trend line, we're in a bull market now. It's fantastic, right? It takes all of 2 seconds. It takes no analytical ability whatsoever other than to be able to join the dots together. There we go, we're in a bull market, right? We're going to the moon. Fantastic. And that could be it. I could just then talk a bunch of buzzwords and, you know, trick you guys into thinking that we're in a bullish market. Or I can actually, you know, be an analyst and analyze the market, not only the structure of the market in terms of the price action, but also all the data that goes into the background of these movements, right? It's not as simple as just drawing a goddamn trend line and thinking it's as easy as that. If it was, then everybody would do it and everybody would be successful doing it. Now, don't get me wrong. A broken clock is right twice a day, as they say. And, you know, sometimes you're going to get that stuff right. But essentially, these trend lines are incredibly weak. They're subjective to the person who's drawing them. For example, I drew that trend line from up here, and I connected the dots over here, right? That's one way of drawing it. But what if I wasn't that zoomed in? Maybe I was actually just looking down here, and I was like, oh, look, we've got this fantastic candle here. We've broken through this trend line. We're in a bull market, right? And that's one way of looking at it. Sure, you could do that. And maybe you don't even want to do that. Maybe you want to kind of be looking at it slightly differently. Maybe you want to go, look, here's our trend line. We've been in a bull market this entire time, you know, and so forth, right? So trend lines are just subjected to whoever's drawing them. And, you know, a lot of people are going to be biased with how they draw it. So instead, they're not a good way of kind of analyzing the market. Instead, there's other ways and other tools that are probably a little bit more beneficial to actually understanding market structure. Market structure is very important. So parking all that but all that on-chain data to one side. If we just had a chart here and we were to throw one indicator on there, that would be the Smart Money Concepts by 𝗕𝗓𝗪𝗐. This is going to tell us a pretty clear thing on this weekly chart. First, off the bat, we left this gap behind here. This gap is what they call a fair value gap. It's also created from an imbalance in the order books. Essentially, some big player bought here, and they were unable to find anyone who's willing to sell it to them on that journey to the upside. Prices jumped from the low side to the higher side, and this gap was left behind, which basically stops the institutional player or the smart money from continuing buying, because why they're going to pay a premium? They wanted to buy it down here, just no one was selling it to them. So instead, they wait for price to come back down to this area, and therefore you have this high probability of revisiting this area. Now, this is the only gap remaining on this weekly chart. Therefore, all other gaps were already filled, meaning that the price likes to come down and fill these gaps. So there's this gap down here towards $17,000 that's likely to get filled at some point in the future. So we keep that in mind. The other thing that's really obvious here when it comes to Smart Money Concepts by 𝗕𝗓𝗪𝗐 is that we had a change of characteristic here for the bear market. We had this change of character, this break of structure to the downside here on this bear market, again confirming that our move to the downside. Now, to support the bulls, we'd have a change of characteristic to the upside, but we haven't had a break of structure yet. So it's interesting to see whether or not we do get that rally to the upside or whether we get that move to the downside. Now, that's on the weekly chart. If I take this down one level and take a look at the daily, we have not had a change of characteristic on our daily to the upside yet. Instead, what we have is a change of characteristic to the downside, a break of structure confirming our move to the downside, and yet we haven't had any major move to the upside confirmed as a change of characteristic. We are still in a bearish characteristic state for a move to the downside. So not only do we have the fair value gap left behind on the weekly chart, but we also have a couple of fair value gaps here, and we have our bearish state still valid, okay? So on the weekly chart, we kind of see a little minor one because it's got dashed lines here, okay? Saying that a minor move to the upside looks bullish, but we haven't had it confirmed with a break of structure. Yet on our daily chart, we have these solid ones, which are telling us major moves are confirmed to the downside. Okay, so that hasn't changed. So from a bigger macro piece, we are looking bearish, we're not looking bullish, okay? So even that's just on market structure outside of using something as simple as a trend line. We can go deeper, we can take a look at what's been going on here. We obviously say often higher highs and higher lows have a tendency to break to the downside, and lower lows and lower highs have a tendency to break to the upside. This is highly visible when we take a look at it from this chart, where we can see that if we are going into lower lows and lower highs, we break upwards. Lower lows and lower highs, and we break upwards. Lower lows, lower highs, upwards. Right? I say this because where we are in the bear market, we do the opposite. And bull market moon boys love to say, oh, we're going into higher highs, we're going to the moon. Where the actual fact is higher highs and higher lows have a tendency to break down the downside. Higher highs, higher lows, tendency to break to the downside. And higher highs, higher lows, tendency to break to the downside. Okay, so where we are right now is on a slightly bigger piece of higher highs and higher lows. We're going to more than likely break to the downside. Okay, so we kind of get this, right? So we understand the market structure. Very, very important. Now, if we were to think about all these things, smart money concepts and Elliott wave theory, and understand the market structure of what is going on here, and we've coupled all of that data with what is going on with the on-chain metrics, it's really hard to be bullish about the market. The only way that you can really be bullish about the market is if you zoom right in and forget about the bigger macro piece, and you draw some trend lines. Like for example, right here on this this daily chart, we can be drawing a trend line right in here. And we can be saying, look, we're setting up some higher highs, and maybe we'll even ignore the wicks, and we'll just go with the bodies like this, right? And we'll skew our own analysis. We'll make it fit our bullish. Look, we're going into higher highs. We're in a bull market. We're going to the moon. And yeah, I can do some clickbaity titles or whatever, right? We could do that, but it's not useful. It doesn't really give us an understanding of a bigger macro piece of what is actually occurring here. And it's not really doing anyone any favors, essentially doing that kind of stuff. So want to be really, really clear, really obvious. And I guess I want to be as honest as I possibly can with the audience here. Essentially, the market, to me, is incredibly bearish. There is very little positivity to be found when it comes to the crypto market at the moment. Not only is there a lot of stuff, where you want to call it FUD or not, going on in the world around cryptocurrency in the US and all of those kind of different things going on with Binance and various other exchanges and so much kind of negativity, right? All the way through to just the fact that big institutional smart money players just are not participating right now. And it's hard to think that retail investors are the ones that are going to drive this to the moon. I think that's an incredibly naive kind of thought pattern to kind of be in. And we also haven't got any decent structure. In Elliott wave theory, there are people out there, unfortunately, thinking that this is a 5-wave structure. I've been through it before. It is not. At the bottom down here, we do not meet the requirements down here for a 5-wave structure. It is not a diagonal. A lot of people are thinking that this is going on. It simply is not. Wave 3 is never allowed to be the shortest wave, and even under an expanding diagonal, it simply doesn't fit. So we know that this is not what is going on. All of this is corrective to the upside in the same way that it was with June. Also, same time as June, we are seeing nothing but selling pressure from the large institutional investors, the ones who actually do need to be backing Bitcoin's price if you want it to be going up into significant heights. We have a lot of real world issues going on right now, a lot of financial problems with many different companies, a lot of bankrupt companies that are yet to even liquidate all the assets required to kind of complete their bankruptcy hearings. Where do you think that Bitcoin and Ethereum are going to end up? They're going to end up on the market. It's going to drown out any demand that there is at the moment. So incredibly bearish. But let me know what your thoughts are in the comments down below. I feel like I've ranted on enough here. If you found this useful, informative, smash that like button. I do appreciate that. If you're new to the channel, subscribe. Join us down in Discord if you haven't done so already, linked in the description down below. If you're looking for more information on Elliott wave theory or smart money concepts, check out 𝗕𝗘𝗪𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏 and some interesting stuff to come on that side of things as well. So do check that out. If you're looking for withdrawing your Bitcoin from exchanges, why not check out Ledger in the description below. And if you're trading and you're concerned over the platforms, we like to use BitGet, also linked in the description down below. If you haven't got a BitGet account, use the link below and you'll be able to get some fantastic offers as well. Until the next video though, guys, have a fantastic day.